going to discuss all formulas which are useful to do problems in marginal costing chapter. This is one of the chapter for BCom third year in 6th sem, useful for the examination point of view. So please watch the video and view the topic till the end to get thorough knowledge on this chapter. Please like, share and subscribe the video. Now we will discuss all the formulas which are useful to do marginal costing problems. So first come to profit volume ratio. So this profit volume ratio also is called in short form as PV ratio. And there are in total 4 formulas for calculation of PV ratio, but as per the requirement in any question we have to adopt any one of the formula, and it depends upon the information given in the question. So now come to first formula. PV ratio is equal to contribution by sales into 100. So what is contribution? Contribution can be calculated in 2 ways. That is, fixed cost plus profit is equal to contribution, and sales minus variable cost is equal to contribution. So in any way we can get the contribution. There are 2 ways and 2 formulas to calculate the contribution. So PV ratio is contribution divided by sales into 100, because we are calculating ratio, so we have to multiply this by 100. Now come to second one, that is PV ratio is equal to fixed cost plus profit by sales into 100. So this is very simple. So in the previous problem we have contribution. In the place of contribution we actually placed a fixed cost plus profit. Just now I discussed that contribution we will get in one way, that is fixed cost plus profit is equal to contribution. So in the place of contribution we actually have written fixed cost plus profit and divided by sales. Denominator is same here into 100. This is very simple to understand this formula. And next one is third formula, PV ratio is equal to sales minus variable cost divided by sales. So in the first formula we have contribution in the numerator place, and just now I said that contribution we can get by way of sales minus variable cost. So in the place of contribution we actually wrote sales minus variable cost and divided by sales. If you observe here, in all the 3 formulas, the denominator is sales only, numerator is contribution only. So this is contribution, and here contribution, and into 100. Because it is ratio, we have to multiply after this numerator and denominator. After writing numerator and denominator, we have to multiply this formula by 100, because we are going to find out the ratio. And next come to fourth formula, that is PV ratio is equal to change in profit divided by change in sales into 100. So here you can see formula differently compared with the previous 3 formulas. And what is change in profit? Change in profit means in the question they will give 2 years profits. We have to deduct 1 year profit from the other year, and whatever we get, that after subtracting those 2 profits, whatever amount we get, that should be recorded here in the place of change in profit. Change in sales means 2 year sales will be given. We have to deduct 1 year sales with the other year, and whatever value we get, that should be recorded here. So you may get doubt. These 3 formulas are looking different and compared with this. So when to use this formula? Especially this formula will be used for the problems where actually details of 2 years are given, and they are asking us to find out PV ratio. Then we have to use this formula for finding out the PV ratio. And if any values are given like this, means only 1 year values are given, then for finding out PV ratio, as per the information in the question, we have to adopt any one of the formula, and as per the information whatever we have in the question, and a suitable formula will be selected and PV ratio can be found out. So these are the formulas for PV ratio. Now come to break-even point. Break-even point means it is a point actually where the businessman is not going to earn profit or loss. There is no profit, no loss point, that is actually known as BEP point, break even point. So if for example, if the manufacturer is able to sell 20,000 units of goods, then if he sells 20,000 units of goods, he is not going to earn profit and there is no loss for him. So that point, so 20,000 units point is called break even point for the manufacturer. So short form for break even point is BEP. And there are few formulas for finding out BEP, and we will discuss all those now. First one is BEP in units. So if you want to find out break even point in units, we have only one formula, that is fixed cost divided by selling price per unit minus variable cost per unit. And come to second one, that is BEP sales. So BEP break even point we are finding out in value, sales value. Here it is in units we are finding out. Here we are finding out in sales, nothing but in value we are finding out. So formula is BEP in units. BEP in units means actually BEP units, whatever we get here, answer here should be taken here into selling price per unit. If you multiply this BEP units into selling price per unit, we will get BEP sales. And next one is BEP sales is equal to fixed cost divided by sales minus variable cost into sales. So this is another formula for finding out BEP sales. We can find out BEP sales with this formula. We can find out BEP sales with the other formula. So depending upon the information in the question, we have to adopt any one formula which is suitable for the question. Next, come to fourth formula, that is BEP sales is equal to fixed cost by PV ratio. If you observe here, numerator place is fixed cost for finding out BEP sales and denominator place is changing. So here it is sales minus variable cost and into sales also is there, but here it is PV ratio. So we can find out by adopting this formula also for BEP sales. Okay, so which formula we have to adopt in case of BEP sales for finding out BEP sales for any question? So we have to see information in the question and the formula which is suitable for the information that should be selected, and so we have to find out the BEP sales. So next one, that is margin of safety. So we have two formulas for margin of safety, that is total sales minus BEP sales. So total sales minus BEP sales, we will get margin of safety. Next, other formula for margin of safety is equal to profit by PV ratio. Profit by PV ratio. So next, margin of safety ratio. Margin of safety ratio formula we have only one, that is margin of safety divided by sales into 100. So margin of safety is different and margin of safety ratio is different. Here we are finding out margin of safety ratio and here we are finding out margin of safety value. Okay. So for margin of safety ratio we have only one formula. Next, come to desired profit or desired sales. If you want to find out desired profit or desired sales, we have only one formula, and same formula will be used for finding out desired profit as well as desired sales. So what are desired profit and desired sales? First come to desired profit. Suppose if you want to sell 1 lakh of goods, so then what will be the profit that we are going to get? So that should be estimated before only, and so that will be called as desired profit. So if you want to get, for example, if you want to get 20,000 of profit, then how many sales you have to make? Okay, so then that will be called as desired sales. So before only you are expecting, if you want to get this much of profit, what sales you have to make, and if you want to sell this many of goods, how much profit you may get. So these estimations can be done in the business, and that can be done through one formula, and you can calculate by using desired sales or desired profit formula. So that is desired sales is equal to fixed cost plus desired profit divided by PV ratio. Suppose you are going to find out desired sales, you should have completely this information, these three: fixed cost, desired profit and PV ratio. Then only you can find out desired sales. Suppose you are going to find out desired profit, then desired profit won't be given in the question, but desired sales should be given. You have to substitute desired sales here, fixed cost and PV ratio, and you have to find out desired profit. So only one formula for two items. I think it is clear for everyone. And next, last one is marginal costing equation. So in marginal costing chapter, we have one equation that is known as marginal costing equation. So fixed cost plus profit is equal to sales minus variable cost. This is marginal costing equation. I think everybody came to know this, that fixed cost plus profit is what? Contribution. And sales minus variable cost is what? Contribution. So contribution is equal to contribution. This is marginal costing equation. So I think everybody understood these formulas which are related and useful to marginal costing chapter, and these are all formulas which actually we have to apply for marginal costing chapter, and very useful. And we will discuss in the next class how to use and how to apply the formulas for questions. I will explain solution for different problems in this chapter in the next class. So wait for next class and watch it, share it and subscribe it, like it please. Thank you very much.